colleagues of the Central Bank, distinguished members of the press, and I can cite Comrade Isalimu, distinguished ladies and gentlemen. 5 years ago this month, we gathered in this same manner to listen to Mr. Godwin Emefiele, FCIBCON, lay out the policy direction of the Central Bank of Nigeria. Today we are here again to listen to him, planned by his deputy governors, to tell us the direction of the central policy direction of the Central Bank of Nigeria. Without wasting your time, it is my single honor and privilege to welcome the governor to give us his statement. Mr. Governor.
Thank you very much. Good morning, ladies and gentlemen, and let me thank you for your presence at this press briefing. You would all recall that on the 5th of June 2014, following my assumption of office as the governor of the Central Bank of Nigeria, I addressed a similar gathering to share with you my vision for the first term in office. It is in the same vein that we have called you again today to briefly reflect on our journey over the past 5 years and outline our vision and policy thoughts for the next 5 years. But before I begin my remarks, please permit me to thank the Almighty God for giving me the opportunity to continue to serve our country yet again. I'd also like to thank President Muhammadu Buhari for not only reappointing me, but also for his support and confidence in the leadership of the Central Bank of Nigeria over the past 4 years. I thank the Nigerian Senate as well for confirming my nomination. Finally, I thank the management and staff of Central Bank of Nigeria for their hard work and dedication, particularly at moments when the Central Bank and indeed the Nigerian people face difficult economic conditions. Whatever achievements that the CBN are recorded in addressing those difficult conditions was indeed reflective of the collective efforts of the management and staff of this great institution. In my remarks today, I'll be speaking on our efforts towards promoting price and monetary stability, exchange rate stability, financial system stability, as well as our efforts to spur growth through our development finance interventions. Thereafter, I'll speak on my vision for Central Bank of Nigeria over the next 5 years, which is primarily driven by the need to support continued growth and development of the Nigerian economy. You will recall, ladies and gentlemen, that during my maiden address on June 5, 2014, I stated that my vision would be to ensure that Central Bank of Nigeria is more people-focused, as its policies and programs will be geared towards supporting job creation, reducing the high level of treasury bills rates, improving access to credit for micro, small, and medium enterprises, deepening our intervention program in the agricultural sector, building a robust payment system infrastructure that will help drive inclusion, in addition to key macroeconomic concerns such as exchange rate stability, financial system stability, and maintaining a strong external reserve. As is the case with most plans, although most of the goals we set were achieved, I would be the first to admit that everything did not happen as contemplated. the normalization of the monetary policy in the United States and the over 60% drop in crude oil prices between 2014 and 16 had significant adverse consequences on our economy and made us adjust our methods to ensure that we still implemented most parts of our vision. Given Nigeria's dependence on crude oil revenues for close to 86% of our foreign exchange earnings and over 60% of government expenditure, the drop in prices led to heightened inflationary pressures, depreciation of our exchange rate, significant drop in our external reserves, and eventually a recession setting during the second quarter of 2016. With concerted efforts by the monetary and fiscal authorities, we implemented a series of measures which led to the recovery of our economy from the recession from the first quarter of 2017. Building on these efforts, I am delighted to note that our external reserves have risen from $23 billion in October 2016 to over $45 billion in June 2019. Inflation dropped from 18.72% in January 2017 to 11.4% in May 2019. Our CBN Purchasing Managers Index has risen for 26 consecutive months since March 2017, indicating continuous growth in the manufacturing sector as a result of measures implemented by the CBN, which has improved access to raw materials and finance for manufacturing firms. The GDP growth has risen for 7 consecutive quarters following the recession, and our exchange rate has appreciated from over 525 naira to dollar in February 2017 at the BDC window to 360 naira to the dollar today. With improved inflow of foreign exchange, the exchange rate has remained stable around 360 naira to the dollar for the past 27 months. Our recovery efforts. Part of the measures we deployed to support the recovery include tightening of monetary policy rate in order to rein in inflation. We also created an investors and exporters window which allowed exporters and investors to inflow and sell their foreign exchange at the prevailing market rate. In order to reduce our reliance on the importation of items which could be produced in Nigeria, we restricted forex access to foreign exchange on 43 items, while deploying our intervention funds to support growth and productivity in the agri and manufacturing sectors of our economy. These measures helped to support the attainment of our monetary policy objectives, such as reduction in the inflation rate, stability in our exchange rate, and improved accretion to our external reserves. Financial system stability. As some of you are aware, the drop in commodity prices affected a good number of our banks, given their exposure to the oil and gas sector. Unfortunately, this resulted in an increase in non-performing loans of our banks. As a result of risk management measures embarked upon by the CBN, capital adequacy and liquidity ratios of our commercial banks are now above the prudential level. Capital adequacy ratio for the banking industry improved from 11% in June 2017 to over 16% in May 2019, and liquidity levels have also increased by over 20% within the same period. In addition, the ratio of non-performing loans in the banking industry has reduced from 15% in June 2017 to 9% in May 2019 due to concerted efforts by the CBN and the deposit money banks, although more work is being done to moderate non-performing loans ratio to the maximum prescribed level of 5%. Our financial institutions are well positioned to perform their intermediation role, which would ultimately help in supporting the growth of our economy. Access to credit and development finance. As part of goals set in 2014, we increased our development finance interventions in order to catalyze growth in critical sectors of the economy. Our objectives were driven by the need to increase investment by micro, small, and medium enterprises, as well as poor consumer credit, some consumer spending, as these factors would have a positive impact on GDP growth and employment. Furthermore, our development finance efforts were driven by the need to reduce our reliance on revenues from crude oil. Ladies and gentlemen, at a point in our nation's history, Nigeria survived on revenues from non-oil sector to the extent that we were a dominant exporter of agricultural produce into the global market. Some of these products include cocoa, groundnut, cotton, and palm oil, to mention a few. Our focus in agriculture supported the raw materials need of our industrial sector and created employment opportunities for millions of Nigerians. But regrettably, the discovery of crude oil and the increasing reliance on crude oil revenues led to a severe downturn in the agriculture and manufacturing sectors in Nigeria, while also exposing our economy to the vulnerabilities that normally accompany an increased dependence on a single commodity for survival. For example, if Nigeria had maintained its market dominance in the palm oil industry, which stood at 40% in the 70s, we will be earning over $20 billion annually from cultivation and processing and export of palm oil today. This would have provided a sufficient buffer for our nation following the drop in crude oil prices. Our situation is further worsened by the unpatriotic activities of some unscrupulous individuals and businesses who embarked on massive smuggling and dumping of goods that can be produced in Nigeria, thus leading to the demise of agricultural and manufacturing sectors and hence the attendant high level of unemployment. Fellow Nigerians, we have a responsibility to reverse the current ugly trend where any external shock affecting oil-producing countries really brings us to our knees. To correct this trend, and as part of our intervention programs, we launched the Anchor Borrowers Program, which has improved access to finance for over 1 million smallholder farmers who are leading our efforts to improve cultivation of agricultural commodities such as rice, tomatoes, fish, cotton, and palm oil. The Anchor Borrowers Program also enabled agro-processors and manufacturers to source their inputs from local sources rather than relying on importation of these items. We also deployed other intervention facilities such as the Commercial Agricultural Credit Scheme and the Real Sector Support Facility. These facilities were used to channel single-digit interest rate loans through our deposit money banks and other participating financial institutions to beneficiaries to support improved growth in the agriculture and manufacturing sectors. The effectiveness of these interventions in supporting the growth of our local industries has been supported by our forex restrictions on the importation of items that can be produced in Nigeria. We also embarked on measures to discourage smuggling of restricted items into the country by imposing restrictions on the use of financial institutions in Nigeria by identified smugglers as their activities undermine the growth of our local industries. These measures are aiding our efforts to support local cultivation of goods in areas such as cotton, rice, palm oil, etc. We also sought to improve access to credit for micro, small, and medium enterprises, given the critical role they play in supporting the growth of our economy. Poor access to credit has been highlighted as a significant constraint to the growth of our micro, small, and medium enterprises. Moreover, given the impact of the recession, it was more important to restart the flow of credit to MSMEs to enable them engage in productive activities that will support growth. As part of efforts to support this objective, we created a 220 billion naira MSME fund, which has been critical in supporting the growth of MSMEs in the agri and manufacturing sectors. We set up the National Collateral Registry and supported the passage of legislation governing the activities of the National Collateral Registry and the credit bureaus. These measures have helped to encourage the flow of credit to small and medium enterprises by allowing them to provide movable assets as collateral in order to obtain finance from banks relative to the previous process, which required that they provide fixed assets. So far, over 400 billion naira worth of assets have been registered in collateral registry by our micro, small and medium enterprises. The activities of the credit bureaus are also reducing the risk encountered by banks in lending to businesses, as it has helped to identify creditworthy borrowers. These two initiatives contributed to the improvement in Nigeria's Doing Business scorecard in the World Bank 2017 Doing Business ranking of 180 countries, as Nigeria moved up by 24 points from 169 to 144. Payment system. Conscious that over 40% of eligible Nigerians in 2015 lacked access to financial services, we embarked on a couple of steps to improve access to finance. Through initiatives such as the Shared Agent Network facility and the launch of our policy on payment service banks, which enables non-banks to provide limited financial services, we sought to encourage the use of technological tools in providing access to finance for people who live in underserved parts of our country. We also set up a payment services management department solely dedicated to enabling the build-up of a robust payment systems infrastructure while seeking to contain the risks to the financial system that could emerge from the use of digital channels. As a result of our efforts, the total volume of retail electronic payments has witnessed a threefold increase over the last 5 years. New financial access points are being created in parts of the northeast and northwestern part of the country as a result of measures deployed by the central bank to extend financial services to the underserved in our rural communities. Salary bailout. The drop in commodity prices and the resulting effects on government revenue led to a severe drop in earnings of most states in the country. Over 34 states incurred huge salary areas and were unable to provide essential services, which led to the decision by National Economic Council in June 2015 that the CBN work with deposit money banks to provide support to state governments. In order to avert prolonged hardship in states, we provided an assistance program to states which helped them to settle their overdue salary and pension obligations. These measures helped to ease some of the budget difficulties faced by the state governments between 2015 and 2017. It also provided enough cushion for states to begin to develop plans to generate revenue from alternative sources in an attempt to make the states economically viable. Our challenges. While these results are reassuring, I think it is fair to state that our task of building a stronger economy is far from complete. The pace of GDP growth remains fragile and is below the rate of our annual population growth rate of 2.7%. The recovery of our economy from the recession has not resulted in a significant reduction in our unemployment rate. We are yet to see a substantial increase in credit to the private sector by our financial institutions. The unexpected drop in crude oil prices, given its impact on our economy, also derailed our attempts at achieving some of the steps outlined in our vision, such as bringing down the rate of treasury bills and in reducing the unemployment rate. Our inability to address these challenges only served to reinforce our view that the CBN must continue to play an active role in supporting the growth of our economy and redirect our emphasis on sectors that have the ability to support improved wealth and job creation for Nigerians, such as the agricultural and manufacturing sector. Downside global growth risks in the near, medium term. Beyond our domestic challenge of high unemployment and subdued growth, our economy is faced with three external events which have the ability to affect our growth trajectory over the near to medium term. First, rising trade tensions between the United States and China, United States and Mexico, and subdued growth in the Eurozone, as well as other emerging economies such as China, India, South Africa, Brazil, Argentina, and Turkey, are affecting their outlook for global growth in 2019 and 2020. The World Bank, according to its latest report, projects that global growth will decline to 2.6% in 2019 from 3% in 2018 as a result of the above-mentioned factors. The second external challenge that may emerge from rising trade tensions and a potential slowdown in growth in advanced and emerging economies is the impact it could have on capital flows to emerging markets. The risk of sudden stops and reversals of capital flows has increased as some investors weigh the benefits of investing in safe assets in advanced economies relative to assets in emerging markets. Third, we are also witnessing rising volatility in the crude oil market, occasioned by the rapid increase in the supply of shale oil by the United States, which has seen its production rise from 9 million barrels in 2017 to over 12 million barrels per day today. The rise in U.S. production continues to put downward pressure on crude oil prices, despite restrictions on crude oil output by the OPEC members and sanctions by the U.S. on the purchase of crude oil from Iran and Venezuela. Our vision for the next 5 years. Fellow Nigerians, a few weeks ago we held consultations with some banks and business leaders in the private sector. We thank them immensely for their thought-provoking ideas and counsel. We intend to sustain the pace of those consultations, as these would act as barometer for measuring the progress being made in the implementation of our policies. Our assessment of the outcome of that deliberation shows that with concerted efforts, the challenges facing the country are easily surmountable. Consequently, working closely with our fiscal authorities, we pledge to target a double-digit growth by the next 5 years. And at the CBN, we commit to working assiduously to bringing down inflation to single digit, while accelerating the rate of employment. Put succinctly, our priorities at the CBN over the next 5 years are the following. First, preserve domestic macroeconomic and financial stability. Second, foster the development of a robust payment systems infrastructure that will increase access to finance to all Nigerians, thereby raising the financial inclusion rate in the country. Third, continue to work with deposit money banks to improve access to credit for not only smallholder farmers and MSMEs, but also consumer credit and mortgage facilities for bank customers. Our intervention support shall also be extended to our teeming youth population who possess entrepreneurial skills in the creative industry. This group deserve our encouragement. We shall also, during this intervening period, encourage our deposit money banks to direct more focus in supporting the education sector. Fourth, grow our external reserves. Fifth, support efforts at diversifying the economy through our intervention programs in the agricultural and manufacturing sectors. We are confident that when implemented, these measures will help to insulate our economy from potential shocks in the global economy. In my second term in office, part of my pledge is to work to the best of my abilities in fulfilling these objectives. Macroeconomic stability. On macroeconomic stability over the next 5 years, with a key emphasis on supporting improved GDP growth and greater private sector investments, we intend to leverage monetary policy tools in supporting a low inflation environment while seeking to maintain stability in our exchange rate. As a result, decisions by the Monetary Policy Committee on inflation and interest rates will be dependent on insights generated from data on key economic variables. We would also strive to continue to sustain a positive interest rate regime to the delight of our important stakeholders. Monetary policy measures embarked upon by the CBN will be geared towards containing inflationary pressures and supporting improved productivity in the agriculture and manufacturing sectors. Working with other stakeholders, we intend to bring down the cost of food items which have considerable weight in the consumer price index basket. Our ultimate objective is to anchor the public's inflation expectation at single digits in the medium to long term. We believe a low and stable inflationary environment is essential to the growth of our economy because it would help support long-term planning by individuals and businesses. It will also help to lower interest rates charged by banks to businesses, thereby facilitating improved access to credit and a corresponding growth in output and employment. Exchange rate stability. On this score, we will continue to operate a managed float exchange rate regime in order to reduce the impact which continuous volatility in the exchange rate could have on our economy. We will support measures that will increase and diversify Nigeria's export base and ultimately help in shoring up our reserves. While the dynamics of global trade continues to evolve in advanced economies, Nigeria remains committed to a free trade regime that is mutually beneficial, but particularly aimed at supporting our domestic industries and creating jobs on a mass scale for Nigerians. We intend to aggressively implement our 500 billion facility aimed at supporting the growth of our non-oil exports, which would help to improve non-oil export earnings. We would launch a trade monitoring system, TRMS, in October 2019, which is an automated system that will reduce the length of time required to process export documents from 1 week to 1 day. This measure will help support our efforts at improving our non-oil exports of goods and services. We will also work with our counterparts in the fiscal arm in supporting improved foreign direct investment flows to various sectors such as manufacturing, insurance, and infrastructure. These measures, while supporting improved inflows into the country, will help to stabilize our exchange rate and build our external reserves. On financial system stability, a resilient and stable financial system is imperative for continued growth of our economy, given the intermediation role that financial institutions play in supporting the needs of individuals and businesses. As a result, we will continue to improve our on-site and off-site supervision of all financial institutions while leveraging on data analytics and our in-house experts across different sectors to improve our ability to identify potential risks to the financial system as well as risks to individual banks. In the next 5 years, we intend to pursue a program of recapitalizing the Nigerian banking industry so as to position Nigerian banks among the top 500 in the world. Banks will therefore be required to maintain a higher level of capital as well as liquid assets in order to reduce the impact of an economic crisis on the financial system. With the rise in digital payments and cyber security threats, we will develop a robust mechanism that will help ensure that the necessary safeguards are put in place by banks and financial institutions to protect against loss of data, fraud, and cyber incursions in their respective systems. A robust payment system infrastructure. An efficient payment system is vital to the effectiveness of monetary policy interventions. It also helps in reducing the cost involved in payment for goods and services. The Payment Services Management Department in the CBN will work to enable the build-up of a robust and secure payments infrastructure in Nigeria that is reliable and easy to access. We will reinvigorate our efforts at driving cashless initiative across the country due to immense efficiency gains that will be derived from it and the impact it could have on our financial inclusion drive. Given Nigeria's large size and the cost involved in building bank branches across the country, the Payment System Department would support the spread and utilization of digital modes of transactions so that every Nigerian will have access to financial services. A strong emphasis will also be placed on improving speed and efficiency of payment channels while working to ensure that digital channels are safe and secure. This will help to build confidence in our nation's payment system. In order to improve utilization rate, we will continue to ensure that payment channels are interoperable, which will enable individuals with digital devices to transact across different banks or payment modes. Through measures such as the Cashless Initiative, the USSD, mobile banking, agent network, and payment services banks, Nigerians can expect to see significant improvement in the payment system infrastructure in Nigeria over the next 5 years. We will also work with the Nigerian interbank system, banks, and fintechs in developing a regulatory sandbox. This sandbox will enable us to test financial innovations by fintechs and banks in a controlled environment in order to assess its impact on the growth and safety of financial system. Targeted development finance. Building on the success of our Anchor Borrowers program and other intervention programs geared towards supporting the growth of our agriculture and manufacturing sectors, and in keeping with the recent presidential directive, we intend to boost productivity of growth through the provision of improved seedlings and fertilizer, as well as access to finance for rural farmers in the agricultural sector across 10 different commodities, namely rice, maize, cassava, cocoa, tomato, cotton and textile, oil palm, poultry, fish, and livestock and dairy. Our choice of these 10 crops is driven by the amount spent on importation of these items into the country and the over 10 million jobs that could be created over the next 5 years if efforts are made to expand cultivation and processing of these items in Nigeria. So far, we have held a series of engagements and consultations with importers and producers of these products. Most of them have committed that they would install and expand their production capacities in Nigeria over the intervening period. We believe these measures will help to boost not only our domestic outputs, but also improve our annual non-export earnings from $2 billion in 2018 to over $12 billion in 2023. Our intervention programs will strengthen the linkage between farmers and agro-processors and manufacturers by ensuring that the output of farmers is purchased by agro-processors and manufacturers. This linkage with agro-processors is necessary in order to prove that farmers are creditworthy individuals with bankable contracts. It will also help to unlock private capital flows from financial institutions to farmers in order to enable farmers meet other orders from their agro-processors. To complement the progress made so far, as well as the lessons learned from the conduct of previous programs, we intend to strengthen the capacity building arms of our Anchor Borrower program, which will help support better farming practices and higher outputs for farmers. Through the credit bureaus, we will also leverage technological tools such as analytics in identifying and supporting farmers that have exhibited good credit behavior in repayment of their loan obligations. This measure will improve their ability to source for financing from commercial banks. We will introduce a non-oil export aspect to the Anchor Borrowers program, which will focus on linking smallholder farmers to international buyers. To discourage the activities of smugglers who bring in restricted goods into the country, perpetrators and their affiliated companies and their shareholders and their top management will be blacklisted and denied access to banking services in the entire country. This renewed focus on our intervention program, coupled with increased support for research and development on improved seedlings and enhanced farming practices, will help drive exponential growth of our agricultural and manufacturing sectors. On financial inclusion, over the next 5 years, through initiatives and policy measures such as the Shared Agent Network and the Payment Services Bank, we intend to broaden access to financial services to individuals in underserved parts of the country. Our ultimate objective is to ensure that 95% of eligible Nigerians have access to financial services by the year 2024. We'll also intensify our financial literacy and consumer protection programs such that current and eligible bank customers are fully aware of the financial services being offered to them, as well as the cost of utilizing these services, which would enable them to make well-informed choices. Besides providing valuable information to banking customers, we are committed to developing and enforcing strong rules to protect consumers. Our Banking Supervisory and Consumer Protection Department at the CBN will ensure that dispute resolution mechanisms in financial institutions are not only efficient but also timely, in order to maintain the confidence of the Nigerian populace in the utilization of banking services. Access to credit. Beyond our intervention programs, we are also working to encourage banks and financial institutions to lend from their balance sheets in order to support the growth of critical sectors of the economy, such as agric, MSMEs, and the real estate sector. Greater emphasis on improving consumer spending and business investment by MSMEs is critical to sustainable double-digit growth of the Nigerian economy. MSMEs today constitute over 90% of businesses in the country. Through the National Collateral Registry, over 400 billion naira worth of movable assets have been registered by MSMEs in the registry. We intend to triple this number over the next 3 years. Our ultimate objective is to broaden the range of collaterals that MSMEs can provide to banks in order to obtain credit facilities. This will help improve access to credit for farmers and MSMEs, and it will also support the growth of their respective businesses. Unique identification. In order to ease the constraint poor identification has on availability of credit to prospective banking customers, the CBN will support an aggressive enrollment of prospective banking customers in the informal sector onto the bank verification number system. The current enrollment of 38 million unique banking customers will be expanded to 100 million over the next 5 years. Ongoing partnership with the Nigerian Identity Management Commission, NIMC, will also enable integration between the two databases. This effort will improve the comfort level of banks in providing services to an expanded customer base. It will also aid in the development of a credible profile for our banking customers, which will assist in improving access to credit for credit-worthy borrowers by banks. Lending to MSMEs. The recently established Universal Microfinance Bank will also work to improve access to credit for our micro, small, and medium enterprises in rural communities, which will help stimulate improved economic activities in our communities. In order to reduce the constraints which high account receivables have on the growth and operation of MSMEs, we will support the development of a trade receivables portal, which will enable MSMEs trade their invoices with financial institutions in order to improve their cash flow and support ongoing operations of their respective businesses. And on consumer credit. Ladies and gentlemen, you will agree with me that today, less than 10% of adult Nigerians who have a bank account utilize financial products offered by banks such as credit cards, personal loans, mortgage loans, auto loans, and consumer durable loans. Consumer credit is critical to the growth of any economy, and indeed our economy, as it will help to boost consumer spending, accelerate improved investments by businesses who seek to meet the demand of consumers, improved consumer spending and investment by businesses will ultimately help to spur the growth of our economy and support our job creation efforts. In order to spur lending to consumers, a lending framework will be announced by the CBN under which large departmental stores, automobile companies, equipment leasing companies, in partnership with financial institutions and the credit bureaus, will be able to provide credit facilities at reasonable interest rates to consumers. This will help to spur consumer spending and aid our efforts at driving the growth of our economy. The framework being developed will support the emergence of a digital, less burdensome process for consumers who seek to access such facilities. Credit platforms of consumers will be shared with credit bureaus to access repayment patterns and credit histories of customers. This will also enable financial institutions to provide additional credit to creditworthy borrowers. Financial institutions will also be mandated to disclose to consumers the upfront charges involved in accessing such credit facilities in order to prevent consumers from being abused by money lenders. On mortgage lending, fellow Nigerians, you'll agree with me again that a lot of equity is currently tied down in mortgage assets which are today entirely cash-backed. In our efforts to support the growth of Nigeria's real sector and mortgage estate industry, the CBN will work in developing a framework that will enable banks to securitize mortgage loans which can then be sold in the capital market. In fact, part of our engagements is also to provide some form of interest drawback for mortgages such that maximum interest to be paid by the qualifying mortgages will not be more than 9% per annum. Adequate safeguards will be put in place to reduce the risk of delinquency in the mortgage-backed assets that will be sold in the capital markets. These measures will reduce the credit and liquidity risk to banks of holding these assets on their balance sheet and improve the amount of funds available to support mortgage loans. It will also reduce the high cost of obtaining mortgages for banking customers. In conclusion, I'd like to conclude my remarks by stating that although these goals are onerous and tasking, the CBN will remain committed to fulfilling its mandated objectives of price and exchange rate stability. We will continue to work to safeguard the stability of the financial system while supporting the development of a payment system infrastructure that will improve access to credit to all eligible Nigerians. Nevertheless, additional emphasis will be placed on supporting greater growth of our economy and in reducing unemployment through targeted interventions in the agricultural and the manufacturing sectors. Over the next 5 years, this will be the task of the Central Bank of Nigeria under my leadership, and we intend to do our very best to achieve these objectives. I thank you for your attention.
Thank you, Governor. Thank you, Governor. Distinguished ladies and gentlemen, that was the roadmap, the policy roadmap for the Central Bank of Nigeria in the next 5 years. And after this kind of delivery, I don't think there should be questions, since we are just going on and on and on. So why don't we suspend the questions until we begin implementation? Unless we insist, I would say we don't need questions. Comrade inside. Okay. I'll continue. Please tell us your name, the organization you represent.
Of course, you've already mentioned. I'm also a member of the National Executive Council of Nigeria Labour Congress, and of course, my primary union is Textile Workers, and I'm the General Secretary. Worker we're quite excited to be part of this unveiled 5-year vision of the CBN. And let me once again congratulate the 11th governor of the CBN for his reappointment as the governor of this great institution. For us being here, it's actually a total commitment because there are a lot of measures that CBN are taking under the leadership of Mr. Godwin Emefiele that have really impacted positively on the well-being of Nigerian workers. First, we want to acknowledge the creative way you intervene to realize the vision of the president that no Nigerian worker should go to bed to go and sleep without his salary or a salary being paid. You know, President Buhari once wondered how sub-state governors sleep, you know, when their workers are not being paid. But it takes the creative effort of CBN to find a way to restructure the loans of the state in such a way that we now have bailout in such states. The relative stability we have now in these 24 states is due to industrial harmony because salaries are being paid. And it's also good economics too because workers' salary is meant to buy goods and services, which is good for the state economies. Again, we also appreciate the CBN authority when you added your voice that it's good to increase the effective demand of Nigerian people. And that has really helped us to get the new minimum wage, which is again good economics for Nigeria if it is implemented, because workers' pay is not taken to Dubai, it's meant to buy goods. And from textile, one of the things that depress our sector is the low purchasing power, because Nigerians are so poor now, they buy second-hand goods instead of buying new fabrics. So if you increase the pay, that would be quite useful. So I think I want to thank you and your management for this good job that has been done. But the last one that is of interest to us is the, your creative denial of funds to, those who are just engaged in wholesale importation, including smuggling of goods. We fully support CBN to realize the vision of substituting the production of these 43 items in Nigeria, especially with respect to textile, because the president also voted the need to create 100 million jobs in 10 years' time. I'm happy that you are committed to this targeted intervention with respect to textile industry, and we assure you will definitely be with you. So in summary, we want to say in the next 5 years, just continue what you are doing before, not just targeting inflation as you have been doing. It has dropped from 18 now to 11%. I wish it to be single digit. But you're also targeting employment and jobs. I just came back from Lagos where we had interactive session with your corporate department, and by the time we ran the numbers of some of the jobs your intervention had created, everybody agreed that this CBN that is focused on creating jobs is people's driven, people's focus. In fact, some say that we should call you the new comrade governor of CBN. But I told them that until you pay your union dues. But the real dues will be that more factories that have been closed down will be reopened. So we're here and we're quite privileged to be part of this new vision. We assure you that we'll partner with you to make this possible, and call on all the other fiscal authorities to complement the good jobs that CBN is doing at the monetary policy. Thank you very much.
I have two quick questions. Okay, if you don't mind, sir, I would like you to shed more light on your plan for banking recapitalization in the next 5 years. Please, thank you.
Premium times. You spoke about the plan by the CBN to bring price index commodities. One of the issues that is really affecting Nigerians is the way prices are rising every day, and nobody seems to bring things down. We want to know, this is somehow a fiscal responsibility. Now, how would you want to marry that with the monetary policy to be able to bring the price index under control?
It's really, really commended. Yeah, but I have a question on talking about smallholder farmers to have access to exporters. do you have plans to help in avoiding food insufficiency? Because the last time it happened with grains, we had issues and grains became expensive until now. The price has not gone down. Also on housing, do you have plans for those in the informal sector, in the housing sector? I just want to know because most of the plans.
Be civil, please. Just one.
Okay, good morning, Governor Oyewantwo from Business Day. I didn't hear you talk about the power sector, then oil and gas sector. I don't know whether, and we remember that in your last, when you unveiled your first agenda in 2014, those were some of the sectors you said the CBN, would look at. Wondering whether there are updates on the mandate you set, and then whether that's not, those sectors are part of what you'll be looking at in the next 5 years.
Words rather than ask questions. What you did was just to commend us for what we've done so far. We really appreciate it when we are commended in this way, and what it does is to act as a tonic that further propels us to continue to do the work that we are doing. You belong to the textile industry, and I think I've said so even many times, that the textile sector used to be the largest employer of labor in Nigeria after the public sector. Today we can all tell the stories about what has happened to the textile sector purely as a result, I use the word primarily, of the unscrupulous activities of smugglers of textile materials into the country. Ladies and gentlemen, it might interest us to know that in today's retail market, if you go to our retail markets in Lagos, in Kano, in the eastern part of the Nigeria, you will find foreigners, and this is not to criticize them, but you will find foreigners that are retailing textiles and goods in Nigeria. For me, it's very disheartening that in Nigeria's retail market, Nigerians are not seen to be capable of even retailing goods that are sold in the market. I'm sure these are not the kind of things that we see or witness in other countries when we do travel. It only means that certain things have gone wrong, and that there is a need for us to do everything to correct those things that have gone wrong, because if we could get to the point where foreigners are those that are retailing goods in the Nigerian market, there was a country where even up to last week, Nigerians were protesting that they are not even allowed to do business, not to talk of foreigners retailing goods in Nigeria. And you can imagine what that means to job losses. We're not talking about Nigerians not producing their goods. We're talking about even goods are being imported into the country, goods that can be produced in the country. Not only that they are imported into the country, but they are even being retailed in the market. This is not good for us. This is not good for our country. And yet, we cry and we talk about unemployment, joblessness, and hopelessness. There's a need for us to do that. And that is what actually is spurring us to say that we will get to the very end of this, to make sure that Nigerians become gainfully employed, those that have entrepreneurial skills, that we will support them one way or the other to access credit, to be able to do their business, whether as smallholder farmers or as small businesses, so that they can go back to market and begin to do even common retailing of goods and services. Thank you so much for that. Vanguard talked about shedding more light on the plan to recapitalize banks in the next 5 years. You will all agree with me that it was Governor Soludo in 2004 that did the last recapitalization we had, moving the capitalization from 2 billion to 25 billion. And I must commend those efforts because it's resulted in positioning Nigerian banks, not only in Africa, but also being among the top banks in the world in terms of capitalization and asset. It also increases or helps to strengthen the banking industry's capacity to take on large ticket transactions. And those are some of the things we badly need today. So, so when you talk about, and if you relate 25 billion in 2004 exchange rate, which was like about 100, right? 25 billion is certainly almost close to about $200 million. Today, if you relate 25 billion at 360, you can see that it is substantially even lower than $75 million. So what we're trying to say is that the capitalization has weakened quite substantially, and there is a need for us to say it is time to recapitalize Nigerian banks again. It's a policy trust which will be discussed at the Committee of Governors meeting, and of course the framework for the recapitalization of Nigerian banks will be unfolded and for the whole world to know. Premium Time says that when we talk about that we're going to work to address food prices, as in lowering food prices, what do we mean? That, and I must say that it is through the concerted efforts of everybody, and here, talking about monetary and fiscal policies, that we can all work together to see to lowering or achieving a stable prices for food items. And of course, it's simple economics. If we lend money or make access to credit available to smallholder farmers at not more than 9%, and they go to the farms, we give them the seedlings, high-yield seedlings, we give them fertilizer, we give them the insecticides, output and the yield from their product is much, much higher, right? Then their prices, you now find that supply of food is boosted considerably and abundantly. So what will happen when supply outreach demand would naturally be that prices will be lower. So I'm just trying to explain to you how our interventions and how our efforts at the monetary policy can help to drive and keep stable food prices stable in Nigeria. I'm not sure I understand this. So smallholder farmers pricing stability for maize and the rest of them. Oh yeah, you were trying to say here that by restricting access to forex for some of those items, to say, let's give an example, the 10 items, that what it does is that prices of food goes up. I am not going to entirely disagree with you, but I can say that what happens at the initial stages of introducing a policy is some of these consequences. But what it is meant to do is to now encourage more people, because what it means is that demand is outstripping supply. They were not just saying we are restricting access to forex or limiting the import, but also that we are also funding smallholder farmers and creating access to credit for them so that they can produce, so that they can go to farm and yield can go up, right? So no doubt, in fact, I must tell you that today, the pressure we are going through, or the challenge we are going through, is that even though you talked about the price of maize had gone up some few months ago, today we are currently battling with the challenge of low price of maize per ton. And we've had to even invite some companies that currently have concessions on silos to come and access a maize aggregation fund so that they can go to the market, buy maize, so as to stabilize the price of maize at a level that continues to encourage the farmer to go back to the farms again and continue to produce maize. So that is what happens when we do the kind of, we're not just restricting access, but also say we're stepping forward to say we will make access to credit, access to finance for you to be able to go back to farms and produce these goods for our people, create jobs for our people on a mass scale, and improve the wealth in our rural communities. I didn't talk about power sector. Well, our intervention in the power sector, like you know, is continuing. We had done some intervention, the 213 billion naira, which was meant to settle some of those obligations, and also indeed the 700 billion and the rest of them. We are not, I must confess that we are not too happy with the way the whole power sector arrangement is unfolding, but we will, in the course of time, provide our advice as to the best ways to really tame this power issue. But I want to say that, yes, you will say that part of the challenges that businesses face is power. But what I'm saying is that we should try to harness the innate strengths in us, not to allow not accessing power to derail us from our own shared objective to say that we must work hard, create jobs, and improve supply and stabilize prices in Nigeria. Don't get me wrong, we would continue to intervene in that sector, but it should not be an excuse for us to let down our guards and then result in a situation where there's unemployment and hopelessness in our country. I thank you all for listening.
I think we have come to a happy end, and I would urge that in the days to come, we will look at how these policies will be implemented. And once again, I'm soliciting for your support so that we, in 5 years' time, we will also gather here to say, yes, you've done it. Thank you very much and have a nice day.
Thank you.
Well done.
Thank you.